The US Federal Reserve has left rates on hold despite Donald Trump's call for a cut. The action follows 3 consecutive reductions last year. The Reserve Bank says inflation is progressing toward its 2% goal, providing optimism for another rate cut at the next meeting.
We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
There's Jerome Powell in the United States. Let's go to one of our regular economic commentators. He copped a bit of flack yesterday from the Treasurer. He's the Judo Bank Chief Economic Advisor, Warren Hogan. Well, certainly your analysis has been noticed, that's for sure, over the last 12 to 18 months, as it has been for a long time before that, Warren. But yesterday, the number came in lowest level in 3 years in terms of inflation, both headline and underlying. Have we beaten inflation?
Yeah, good morning, Kieran. Yeah, look, I don't think we can be confident of that just yet. We've got to make a clear distinction between what the CPI is measuring, and it's actually not a bad measure of cost of living pressures, and what inflation is. And of course, all these government subsidies, not just the federal government, but the states, and range of different features, whether it's public transport, childcare, rents, electricity. If you take all those out of the equation, inflation in this country is probably running more like 3 to 3.5%. It's come down, and the numbers were genuinely a little bit better than expected, but we're talking about 0.1 or 0.2 percentage points. So look, no, we can't. And if you look at what's happening in the United States, the fact that they held on cutting rates further overnight highlights this point. The reason they did it, despite expectations from just a few months ago that they were going to take the federal funds rate down another 100 basis points, if not more, is because inflation stopped falling and the economy is showing resilience, and there's jobs growth and unemployment's low. So this is the same situation we have here. And of course, it means that we have to be still pretty cautious before we declare victory. And I don't think we can do that just yet.
The markets have a different view, Warren. They're pricing in a rate cut in February at about, the last time I looked, it was around 90%.
Yeah, the market's been holding this view since the RBA sort of removed their tightening bias at the December meeting. And of course, the better than expected inflation numbers yesterday saw it really ramp up to basically being fully priced. That is, they think it's a done deal. Markets don't know how to cope with some of the non-economic factors affecting the policy debate right now. We can see a lot of pressure on the RBA. There's this very hotly contested election campaign about to begin. And markets have only got a one-way bet. They're either going to cut or not. So I don't think the market probability is a good reflection. I think it's probably, less than 50%. I don't think they're going to cut in February. The economic case isn't there. But we'll wait and see. We're getting some communications from a senior RBA official this afternoon.
We will indeed. And what is the risk then, if you don't think the economic case is there? What do you see as the risks of the RBA going in February?
Well, look, I think it's still only 1 in 4, maybe 1 in 3 before the election. I mean, we just don't know how the RBA board and the senior RBA officials are going to make judgments about these things. I mean, I think it should be, kept in mind that, this idea of political pressure is a two-way street. The coalition's copped 2 rate hikes in election campaigns in the last 15 years. So a rate cut ahead of an election campaign could be construed pretty unfavourably by the other side of politics. So they've got to be careful here. And I think the economic case has to be clear. It can't be just a borderline case. So
when you say it's a borderline case, I'm interested because central banks, don't they want to preempt, sort of get ahead of decisions in a way that you don't have to wait until it's back in the target band before you move with a cut, if it's heading in that direction?
Yeah, no, exactly. And that's the art of central banking. It's, we all know where the interest rate should be, or broadly. It's about the outlook. And that's why a rate cut now is not appropriate, because these inflation numbers, and they're pretty good, but they're not all the way there, but they reflect weakness in the economy a year ago. What matters for the RBA and interest rates is inflation in a year, and that's what's going on in the economy now. And we've seen a big improvement in consumer sentiment late last year. The tax cuts have finally got some traction. The jobs growth is now showing up as higher retail sales, and the big one was a rise in job vacancies from already high levels. So the demand for labour in the private sector is still very strong. So this is all telling us that the economy is actually improving, and that's the reason there's a question mark on whether inflation will get down into the target band and stay there. And of course, that's the lesson in the US, where their inflation has stopped falling and is even rising a little bit now.
Warren Hogan, great to get your insights as always. Thanks.
Thanks, Kieran.